Hi, and welcome. You're listening to the X22 Report. My name is Dave, and this is episode 754A, and today's date is August 31st, 2015, and the title of this episode is The Petrodollar Unwinding Will Decimate the Economy. Let's get right into the economic collapse financial news. Let's get right into what has been happening here. Today we see the markets have closed down. Friday they closed down a little bit. It looks like the high-frequency plunge protection team, they did whatever they could. They couldn't get the markets up to where they wanted. I mean, we saw the Asian markets, they finished down. Europe was closed today. And we're starting to see the same thing that happened back in 2008 during the summer months, where we're seeing a lot of up and down of the market, swings high, swings that are low. And we see this also in 1929, 2001. And we're hearing a lot of financial experts, we're hearing a lot of talking heads out there saying, yes, we are headed into a bear market. Well, I'm saying we're heading into a deep collapse. They've already started the propaganda blaming everything on China. Now, we discussed this before. The central bankers, they do not want to take the blame for any of this whatsoever. I mean, we can just see from everything that they've been doing and the propaganda they've been using, everything is on China right now. Now, of course, as time goes forward and things kind of change, where the market gets worse, they're going to expand on who is responsible for all this. But it's much easier to blame China right now because they're looking at their manufacturing, they're looking at the devaluation of the yuan, and they're saying, yes, you see, they're the ones who caused all of this. But we know better. We know this is the central bank and their policies going back for quite a while. And we know, because we've been discussing it all this time, that this entire system is going to collapse. We're getting data that foreign investors right now are pulling out of China at a quicker pace because of what's happening there. They're getting nervous. They're taking their money out, taking it out of the stock market. But the same thing is happening in Europe, in Japan, and the United States. People are looking for a safe place to put their investments. We see Japan, their factory output has turned down in July. Japan's factory output contracted a worse than expected 0.6% on month in July. Production cutbacks in the electrical components and transport equipment industries led the decline in manufacturing, and they are seeing an inventory buildup during this whole period of time, just like we're seeing here in the United States. And we know manufacturing has been in a decline, not just here in the United States, in China, the US, Japan, because you have to remember that consumer-based economy cannot support what's going on. The people don't have the money throughout Europe, the United States, Canada, Australia. The people are tapped out. There is too much debt. It cannot be sustained. I mean, in Canada, it is just getting ugly there. And I remember just a couple months or a year ago when everyone was saying Canada is doing fantastic, housing market is booming. Boy, how quickly things turn. The province of Alberta, the epicenter of the Canadian oil bust, is sliding into something much worse than a recession. Layoffs are already cascading through the oil patch as companies are retrenching and adjusting to a new reality. New vehicle sales are plummeting. Home sales are taking a broadside. In August so far, total home sales in Calgary plunged 28% from a year ago. Condo sales collapsed 39%, with the median price down 8%. According to the Calgary Real Estate Board, year-to-date, total home sales in Calgary are down 25%, condo sales 30%, and those condos that did sell spent about 30% longer on the market than condos did a year ago. The Business Barometer Index for all of Canada, which measures the optimism among small businesses, dropped again in August for the third month in a row. An index level between 65 and 70 indicates the economy is growing at its potential, but now it hit a 56.7, the lowest level since April 2009. Now we're seeing the real estate market completely collapse in Canada. That's what we're seeing. I mean, a year ago, if you looked at this, you'd say it's impossible. Houses are continually going up. Sales are happening. Prices are fantastic. And now, look at what's happening. Now, is it in every single area? No. But it will spread. We are seeing the same thing here in the United States. Things are starting to really accelerate and fall apart. We're seeing the ISM Milwaukee was a complete disappointment, missing for the 8th month of the last 9, printing 47.67 versus a 50, which they expected. Chicago PMI just printed a slightly disappointing 54.4, expecting a 54.5. This slowdown suggests there is a little to no momentum in any recovery stemming from the second quarter bounce. Weakness under the surface is broad as purchasers warn failure of new orders to materialize within the next few weeks could put firms at risk of being over-inventoried and curtail production levels. Perhaps most worrying, though, is the 4th consecutive contraction in employment. What's even worse than this, we are seeing in Texas, manufacturing, just collapsed. There's no other way to say this. Dallas Fed's second month dead cat bounce has collapsed. Negative 15.8. They expected only a negative 4.0. This is practically the weakest level for a manufacturing index since 2009. The entire report is a disaster. New orders crash from 0.7 to negative 12.5. Even worse, 14 of the 15 hope indicators declined, and as one respondent warned, the quantitative easing hangover is starting. This is not good. August will be the worst production and delivery month since March of 2014. It completely fell apart. And we're not just seeing this in Texas, we're seeing this all around the country. The U.S. government, the corporate media, they're going to keep this very, very quiet. They'll put spins on it, making like this is normal, this is a normal recovery, this is what you see, until the bitter end, when the market finally comes down. Then they'll admit everything. But of course, they're going to say, it's not the central bank, it's not the Fed, it's not the government. We are not to blame for this. This was because of this other country or this other group. This is what they're going to do. And as the economy continually declines and falls apart after the stock market crashes, we're going to see some type of an event. So they can further blame this on a country or group. This will not end. And it won't end well. We see Walmart right now. They were part of the retail landscape that said, okay, we're going to hike the minimum wage. But all they're doing right now is they're hiking the minimum wage, but cutting the people's hours. So they don't have to pay more in the long run. So it really didn't work out. And like I said, yes, making more money is good. It does help the people. But eventually what happens is that prices, because we see inflation continually go up, and that minimum wage increase doesn't help anymore. It's a short-term fix. It's not a long-term fix. We need to go to the root of the problem. And what is the root of the problem? That is the central bank. We're seeing right now, retail is not looking good whatsoever. The main department stores like Kohl's and Macy's and JCPenney, Sears, they're all reporting poor retail sales. Now, of course, they can't blame it on the weather. They can't blame it on the winter months. It's sunny out. Of course, they're using the excuse that people rather be at the beach than go shopping at this point. What are they going to do when we go into the holiday season? They're going to blame that it's too cold now during the holiday season when everybody wants to shop because they're purchasing gifts for the holiday? No, they're running out of excuses. They don't want to admit that it's the economy. The people are tapped out. They don't want to admit that whatsoever. Now, when we look at what's happening with China, and we look what's happening with the petrodollar, we look what's happening with the economy, we see China might be letting the air out of the bubbles ahead of the crowd here. I mean, they're starting to unload their treasuries, and maybe one of the reasons that China is devaluing is to use this as a cover for its desire to unload as much of their massive treasury holdings as possible without trashing the market or losing the Fed's bid for treasury paper. I think they know what's coming. I think they're planning to unload as much as they possibly can to get out of it because they realize the system's coming down. And we know the petrodollar is unwinding. And it's going to be a disaster when it unwinds. I mean, China's transition right now to a new currency regime was supposed to represent a move towards a greater role for the market in determining the exchange rate for the yuan. And that's not exactly what is happening right now. The liquidation of hundreds of billions in U.S. paper is happening right now. And of course, we see it all over the place. The world suddenly became aware of this. And it actually means when countries begin to draw down their foreign exchange reserves. But to truly comprehend what's going on here, one needs to look at China's U.S. Treasury liquidation in the context of the shift that began to unfold about 10 months ago. These were dollars that for years have been recycled into U.S. dollar assets in a virtuous loop for everyone involved. The demise of that system meant that the flow of exported petrodollar capital suddenly turned negative for the first time in decades as countries like Saudi Arabia look to stash their foreign exchange reserves to shore up their finances in the face of plunging crude. In short, China's foreign exchange management means that Beijing has joined the global U.S. dollar asset liquidation party, which was already gathering pace thanks to the unwinding of the petrodollar system. So what we're seeing right now is that countries are getting out of the petrodollar. They're removing their foreign exchange reserves, saying we don't want to hold on to these dollars, and they're getting rid of them. This whole thing is going to collapse around us. In other words, when all of these emerging markets and all these countries start getting rid of their reserves, those reserves, that currency that they're holding, will come back to the United States. At that point, we will see inflation here because we'll have too many dollars in circulation. And that means the value of the dollar is going to go down. And that means things are going to get very, very expensive. And once this happens, this is going to decimate the economy here in the United States. This is why the United States government central bankers have been pushing the blame over to China. Because we've said this many times, that the central bank does not want to be blamed for what is about to happen. And that is a complete collapse of the system. And we see since 2014, central banks around the world in different countries have been asking for their gold back. So far from the Fed, there's about 246 tons of gold that were withdrawn from the Fed. Because each country realizes they need to hold their gold physically. They just can't have a claim check. And we see first it was Germany who redeemed 120 tons of physical gold in 2014. Then it was the Netherlands who wanted 122 tons of gold. Then Austria, where their gold was held in the Bank of England, and they redeposited it in Vienna, Switzerland. And we can see these nations are saying, okay, we need to hold our gold. We understand what is coming. And those countries that have gold, they will be kind of okay. China has been purchasing tons of gold. Russia, tons of gold. Nations are asking for their gold back. And we know the central bankers right now are going to use excuses of why they're not responsible for what is coming. And here is an excuse from one of the central bankers where they say, we are merely reacting to a situation we did not create. It's almost like Ben Bernanke coming out in 2008 saying that we are not forecasting a recession anytime soon. And he said this in the year of 2008 when we had a recession, when the market crashed in October. And we can see already the central bankers are out there using excuses and basically taking the blame off themselves and putting it elsewhere. And this global collapse is going to be unlike anything in recorded history. It is going to be absolutely awful. I mean, we've never recovered from 2008. And things have not gotten better since 2008. Actually, they're much worse. They look better on paper. They look great statistically. But in reality, with people who are not working, more people on food stamps, more people losing their wealth, their homes, making less money, retail contracting, home sales pumped up into a bubble. Just think of all the bubbles we have. This right now is a central bank economy. They've created it. They maintained it. They use statistics to support it. The people are on the sidelines. The people are tapped out. The people are the ones that are going to suffer, and this is why you need to be prepared. This is why you need to make sure that you have food, water, medical supplies, gold, silver, weapons, you name it, you need it. Batteries, solar-powered lights. We don't know exactly what's going on, so you need to be prepared for all different situations. If you haven't started, you can go to lifereliance.com. They have bug-out bags, seeds, food, water, all ready to go, prepackaged. If you're going to Sam's Club or BJ's or Costco or maybe to Walmart, I mean, you can continually do this. Get your canned goods, get your food, get your water, whatever supplies you can get your hands on. Go to Amazon.com. That's fine too. Any place you need to go, just get your supplies. Make sure you have enough. Don't do it for 1 week. Don't do it for 2 weeks. My rule of thumb, make sure you have enough for 6 months. If you can only do 3 months, do 3 months right now. If you have been doing it and you have about 6, 7, 8 months, continually add to your stockpiles. Don't stop. Because this situation right now is not going to get better. I mean, we heard from Bill Holter, we heard from Jim Seclair. Credit lines are going to dry up. Deliveries are going to come to a screeching halt. And we're seeing the market right now fluctuate up and down dramatically. And we're seeing the blame game already coming out. This is a sign. It's flashing red all over the place telling you. CNN is saying that the stock market's not going to crash. And like I said, when the corporate media comes out, when the president comes out and says this will make the economy stronger, it is always the opposite. They're trying to fool everyone to make them think that everything's going to be okay. Just like the Fed did back in 2008. The subprime is contained. Don't worry about it. People, go about your business. Put your money back in the stock market. We're not predicting a recession in 2008, even though we're having one in 2008. Everything is fine. Everything is contained. It's not. They're lying to you. They're never going to tell you the truth. We see Obamacare. There's so many different taxes intertwined with Obamacare. It's absolutely ridiculous. And the way they're going to get you to pay is that your premiums are going to go up. We have the Obamacare Cadillac tax, which is going to take effect into 2018. I mean, who knows if we'll make it that far. But we're already hearing from the Democrat side, from the Republican side, saying, okay, this is not going to be good. This is really going to put stress on the system. Because, those tax-free flexible health spending accounts, well, they're endangered right now. And those people who are getting health benefits, the employers are going to have to pay. And this whole thing is to bring revenue into the government, into the insurance companies. It's not a benefit for the people. None of this was. They knew this system was going to come down. They tried to implement it. They tried to get all of this going back when it was implemented, but he had to put it off because the whole thing was a complete disaster. And we're starting to see some of these taxes come in right now, penalties, and the people right now are tapped out. There are so many people who can't even pay their taxes because they're just not making enough right now. I mean, think about this for a second. Someone who had a full-time job, who was working, making, say, $120,000 a year or whatever it was, gets laid off. And then next year, they're working part-time. Taxes are due. They don't have that much of a savings. They have maybe just a little bit. They're trying to make ends meet with their home, with their car, with their insurance. And now they just don't have the money to pay the taxes. This is happening to a lot of people. And it will continually happen. It's not going to go away. None of this is going to go away. And sooner or later, as we can see, this system will completely collapse on itself. Listen, everyone, thanks a lot for listening. Be well, be safe, and especially be prepared. Thanks a lot.